Hello, my name is Steve Bigelow with the Candlestick Forum. We're starting to see again that divergence in the market indexes. The the Dow, so we can see, did a bearish doji sandwich over the last few days. One, that's a strong sell reversal signal. Two, it closed below the T line. So when the market was trading up today, that's why we advise not getting too excited. You had to see where the market, or the Dow anyways, closed. As you can see, it closed back below where it opened, telling you there's still no strength here. But at the same time, you had the J-hook pattern bouncing off the 50-day moving average on the NASDAQ. This was a pretty good indication there was going to be more upside. So we're now sitting in the market conditions where you can have both longs and shorts in the portfolio to take advantage of the different uh, sectors acting strong and the other sectors acting weak. For example, when we recommended AVIR was based upon improved probabilities by using the series of dojis plus kind of a fry pan bottom that broke out to the upside. One of the best features of candlestick patterns is that they will still continue to improve or move in the direction as expected with a high degree of probability, because this was a buildup of investor sentiment that is still now being fulfilled no matter which way the market conditions are moving. Same as analysis over here on ACAD. You can see the big fry pan bottom, the dimple, the breakout level right here at the 50-day moving average, confirming the fry pan bottom. And what was our implication? There would be still more upside out of this pattern. Today, it essentially broke through this level after showing a little bit of weakness yesterday and turned right around. The probabilities are pretty strong that this fry pan bottom breakout situation is still in progress. And what do we look for a fry pan bottom breakout? That strong price move that told us there's a now confirmation of that pattern. This is not rocket science. This is just the results of what the Japanese rice traders have illustrated to us for hundreds of years of how human nature reacts. This puts you in a situation where instead of most investors saying, oh man, I'm not going to chase this one, that we're buying because we know the expected results is much more upside. Same scenario on the downside. When we see that strong sell signal, in this case, AI was a bearish doji sandwich, a very strong sell signal, closed below or gap down below the 50, told us the probabilities are that this is still in a downtrend. The more pieces of evidence that you can apply to your analysis, like our recommendation to short LPX, was based upon there was an evening star signal up here with a strong gap down best friend signal, another sell signal right here closing below the T line, and now we know that the selling is strong because look at our double dojis. Double dojis are usually an implication that the selling, some consolidation. The consolidation isn't very powerful. Selling, consolidation, selling. So when you add all this together with that double doji and the failure to get back up above the T line, the implication is you're still looking at more downside. This is all just candlestick logic put into graphics that you can understand. You don't have to be a sophisticated technician to see what the patterns are telling you have resulted in strong results over hundreds of years. So right now, we've got the NASDAQ trading higher based upon this J-hook pattern. This is just a good indication there's going to be some sectors trading stronger while other sectors are trading weaker. With that, join us this Saturday. We're going to be doing a mini session on the breakouts and how to take advantage of the strong price moves based upon candlestick signals and patterns. These sessions usually are supposed to only last an hour. They go for an hour and a half. They aren't very expensive, but it gives you a lot of insights on what goes on in investor sentiment. That'll be it. We'll see you in the chat rooms.